Now, let's back to English session now. And thank you once again for the wonderful sharing by Max and Yan Yue. The upcoming session is actually happening right now is focused on sustainable and greener investing. Now, you can actually do a lot more for environment to investing right than just using less plastic bag or straw. Let's find out more from Victor Wong, Senior Director and Head of Sustainability Office of UOB Asset Management, and Hong Lee, Assistant Vice President of Sustainability Office of UOB Asset Management. And please remember to type your question into the Slido section that can be found on the right of your screen, and we will do our best to answer them. And Edward, Vice President of Intermediary Sales of UOB Asset Management, will be the moderator of the session. Over to you.
Thank you, Chris. Okay, I'm just gonna share the slide. So you're seeing the correct screen? Okay, I'm going to go into full screen mode. Okay, hope everyone's seeing the full screen mode. Okay, so good afternoon, everyone. Thanks for taking your precious time on a Saturday afternoon to actually attend this session. Once again, I am Edward from UOB Asset Management, and today I will be the moderator of this session. Now, looking back at the pandemic, it has not only caused a global health crisis, but also sent financial markets into a maelstrom in early 2020. Now, while the outbreak is undoubtedly a tragedy of epic proportions, it is also definitely brought to the fore a wide variety of ESG challenges that we witness today. Governments, companies, and individuals around the world have taken bold steps in response to address these ESG and climate issues. Now, such trends of driving the need for sustainable business practices are here for the long term, and embracing in this forthcoming trend is a way for readying your portfolio for the coming changes in the global economy. Today, I'm very delighted to have two of our distinguished colleagues from our Sustainability Office, Mr. Victor Wong, Senior Director, Head of UOB Sustainability Office, and Mr. Hong Lee, Assistant Vice President, to be speaking and providing insights on the topic of building a sustainable income and a greener future. So without further ado, let us all tune in to what the experts have to say. Victor.
Thank you, Edward, and thanks for a very passionate introduction to this very interesting strategy that we have today. I think before we start, I want to turn and look at my colleague Lee and ask him a question. Now, speaking of building a sustainable income and greener future, Lee, what comes to your mind first?
Hi, Victor. I think of green buildings. Actually, green buildings can both provide a stable cash flow via rent and positively contribute to the climate change. The definition of green building varies, but most of them take environmental considerations in construction and operation. They have similar key characteristics such as the efficient use of energy, conducting active waste reduction measurements, as well as enabling the recycling, and most of them also comply to net zero emission. So, Victor, how can retail investors invest in green buildings?
Victor, maybe you might be on mute. Sorry.
Yeah, I'm sorry about that, Edward. Yeah, so I think, Lee, in response to your question, as retail investors, one way to invest in REITs, I think, is to look at an Asia-Pacific Green REIT ETF. A bit of background on REITs. Of course, a REIT is a collective investment vehicle that invests in a pool of professionally managed real estate assets and is listed and traded on a stock exchange. Now, so if you invest in REITs that invest then in a pool of professionally managed green real estate assets, I think you have a key of building a sustainable income and a greener future. All right.
Yes, Victor. So you mentioned about the UOB Asia Pacific Green REIT ETF. Maybe you can give more details about this fund?
Yeah. So this ETF is the world's first Asia Pacific Green REIT ETF. The ETF is a passive strategy which tracks the underlying index called the IHUOB Asia Pacific Yield Focus Green REIT Index. And this index was constructed by a partnership among UOB Asset Management, the Singapore Exchange, and GRESB. The index is comprised of a basket of 50 REITs, which deliver high dividend yield to investors by investing in the Asia Pacific region, including Japan, and focus on green REITs, which are identified via a high ESG quality screening done by GRESB. Now, the aim of the ETF is to contribute to the greening of the real estate sector with a focus on the Asia Pacific. The ETF has also received initial seeding of 50 million Singapore dollars from UOB. And one of the objectives of this ETF fund is to provide profit with purpose. As the ETF will focus on high yield REITs, it aims to provide a quarterly distribution of up to 4% dividend per annum to deliver both profit and a positive green impact.
Yes, Victor. So as for delivering profit with purpose, that's exactly the key objective of the Asia Pacific Green REIT ETF. So as for why we need to invest in Asia Pacific Green REITs, maybe I can do a very quick preview from profit and purpose side as well. So on the profit perspective, REITs per se aims to deliver a stable income, and its equity future also equipped it with the ability of the long-term capital appreciation. The profit is also secured by the REITs dividend payout regulations. In addition, REITs can also provide a diversification to investment portfolio, which holds the supportive market valuation and strong outlook now. While for the purpose front, green buildings is one of the key contributors to climate change, investment in Asia Pacific Green REIT can also further boost the increasing focus on the sustainability and further in turn deliver positive environmental feedback to the society.
Yeah, I think, thanks, Lee. I agree with what you have been saying so far about the Asia Pacific Green REITs. Now I'll give a bit more details on how this ETF actually and the REIT can provide the profit or the returns. Now, as mentioned previously, a REIT is a collective investment vehicle where your money as an investor is pooled together with other investors. And this sum of money will then be further invested in a portfolio of professionally managed real estate assets. Now, REITs can provide a very valuable addition to a traditional stock and bond portfolio in many ways, as it can earn both long-term returns via appreciation and regular income through dividends. The underlying assets provide a steady rental stream, which flows through to investors as regular income distributions. And the dividends of REITs are generally prompt and consistent. Now, turning to the next slide, if we combine the demographic aspect and switch to the investment opportunity in Asia Pacific REITs, there is an even more appealing investment case. Now, we look upon REITs as a very favorable asset class because it allows an investor to diversify beyond the standard sector allocation. Its risk profile differs given their REITs are generally like an equity with bond-like features. So when we compare Asia Pacific REITs to the broader Asia Pacific equity market, you can see that REITs have outperformed over the long term, delivering an annualized return of 8.4% compared to about 5.8% for the Asia Pacific equity market. And when we look at yields, Asia Pacific REITs also generate better absolute yields compared to equities and government bonds, right? And if you look now, REITs also have something also on their side, and that's dividend regulations. REITs in most countries are required by law to distribute at least 90% of income earned from their real estate investments. And this income will be directly paid out to investors through dividend distributions. In general, these dividends from REITs are not subjected to taxes in Singapore, for example, unlike rental income from physical properties. So you have friendly taxation rules, steady dividend income, and long-term capital appreciation. And that's why this has allowed REITs to deliver competitive total returns historically. Right? Their comparatively low correlation with major asset classes, especially the broader equities market, is another compelling reason for investors to give very strong consideration when you want to think about adding REITs to your portfolio. Nowadays, most investors have allocation of different asset classes, right? And different geographic regions in their portfolios, for example, like Asia bonds and Asia equities. So if you add Asia Pacific REITs into your mix, into your portfolio, this will make it a good investment tool to mitigate the portfolio risk, right? So here, I believe one of the biggest concerns which might be on investors' minds is the rise in interest rates. And how will this affect the REITs? Well, REITs are typically priced for the yields, and as a defensive asset class, it would potentially become less attractive when interest rates rise. However, this doesn't mean that investors should avoid investing in REITs in a rising interest rates environment. And the reason why is because in reality, if you have an environment of rising interest rates, typically this is an indicator of an improving economy, which is generally favorable to the overall real estate sector. What does this mean? It means that the real estate buildings, the buildings that the REITs invest in, are able to grow occupancy rates, are able to secure new properties to build, and most importantly, raise rents. And I think rental reversion, I think this is a very important advantage for REITs, because earlier we have talked about higher incomes and they are mandated to return the income to investors. So a rental reversion, a positive rental reversion, is very favorable to the REITs. Now, of course, this will help to improve revenue and cash flow for REITs. So therefore, I think clearly, if you have a strong economy, I think the positive impact of a strong economy can go some way to offsetting the negative impact of higher interest rates. And while we do expect global interest rates to rise, given that global central banks are starting to taper, the good news is that we are potentially entering some sort of a sweet spot where you can have rises in interest rates in a gradual and known manner, and where REITs are also able to enjoy rental growth and capital appreciation, right? So then turning from interest rates to the broader macro environment, we still believe that the broader macro environment remains conducive for REITs. Let's look at valuations, right? From a valuation standpoint, Asia Pacific REITs are still decently valued. The yield spread is not at overstretched levels. Okay, so we've looked at the yield spread over the 10-year government bonds yields. At the end of last year, we were looking at the yield spread about 2.31%, and this is slightly below the mean. So the current trend that we are seeing now is quite similar to the ones that we have seen in past cycles, right? So where do we expect yield spreads to go? We expect the yield spread to narrow further, and this means room for potential capital appreciation. And given that we are in a still relatively low interest environment, the hunt for yields will continue, right? So where are the REITs in Asia Pacific generating yields? On average, they are giving you about 4 to 5% yields on average. And the growth in the dividend distribution is expected to continue at nearly 6% per year, right? So, of course, we've got to talk about COVID-19 and how this has impacted the REITs as well. So there has been turmoil in the financial markets, and REITs clearly have not been spared. Tenants have been affected by restrictions and other preventive measures. However, I think here in Singapore, we have seen evidence as well, recent announcements from the government. We're beginning to see that with the effective rollout of vaccination programs around the world and the gradual removal and easing of restrictions, we are seeing a return in business confidence. As the post-COVID situation progressively recovers to some level of normality, we are seeing some uptick in M&A activities in major Asia-Pacific REIT markets, and this trend is likely to grow. So if countries, and we are seeing this now, as countries start to reopen their borders and emerge from the pandemic, what we will observe is a recovery in trade, travel, and tourism, which will result in strong growth prospects for Asia-Pacific REITs. So clearly, on the profit front, investing in REITs can provide sizable advantages. So I think I've said quite a lot on the profit part, Lee. Would you like to share more now on how REITs can further contribute by combining returns with green impact?
Yes, thanks, Victor. So we believe sustainability has definitely become the mainstream now. The pandemic may well have proved timely as a wake-up call for all of us for environmental and social responsibility. So governments are catalyzing the adoption of the sustainability practices. And major corporates throughout the world are also reassessing their business strategies to meet their sustainability target and goals. And the world is waking up to investment opportunity that this brings. So in a recent survey on sustainable real estate done by another global commercial real estate company, JLL, they found that sustainability now is the third consideration for occupiers. And 7 out of 10 are now willing to pay a rental premium to lease green buildings in the future. And 72% of the investors believe that the green certification of buildings drive higher occupancy, higher rents, higher tenant retention, and overall higher value to the asset. And due to the rising awareness, pressure from the government, the adoption of the net zero carbon is also set to double in Asia Pacific by 2025, comparing to the current 40% on the real estate, which already adopt the net zero target. So as you have come to realize that the sustainable and green REIT are made up of more than just green buildings itself, but there's no doubt that the buildings are the centerpieces of what makes a REIT. So as mentioned in the beginning, green buildings reduce or eliminate the negative impacts on the environmental and climate. So definition of green buildings may vary, as I mentioned in the beginning, but they can be tied to the carbon and energy objectives such as net zero emission and considerations for their occupants' health and well-being. So as you may see from here, based on the IFC report, green buildings are not just a low-risk asset, but are able to provide higher value too. Green buildings definitely offers a high number of economic or financial benefit, ranging from saving of additional costs, reduction in operation costs, and higher rental income, and many more. So now I'd like to share with everyone a shocking number. As of 2020, buildings and constructions accounts for around 40% of the global CO2 emission. So to make things worse, global building stocks is also expected to double in area by 2060, causing an increasing in the carbon emission occurring right now. So increasing in pressure for the real estate to be green is creating a $17.8 trillion investment opportunity in green buildings by 2030 in Asia Pacific region. So it is the highest among the rest of the geographical areas. So we can see that there are huge opportunities in investing in green REITs.
Thanks, Lee. So these are compelling reasons for the attractiveness of Asia Pacific REITs and the opportunities in the growth of sustainability. So now let me share how one can invest by introducing our UOB Asia Pacific Green REIT ETF. So let's talk about what this ETF is all about, right? Now, there are 4 key characteristics about this ETF. First, we will use GRESB's real estate assessment to quantitatively evaluate the ESG quality of green REITs. What this means is that the assessment will comprise 3 main indicators: GRESB's overall ESG score, GRESB's environmental score on environmental performance, and lastly, GRESB's public disclosure score to check how REITs disclose their information. Now, number 2, the index selection process involves selecting a basket of 50 names with high yield REITs to provide an attractive profit. And this ETF also aims to deliver 4% dividend on a quarterly basis. Number 3, now once these 50 names are selected, the weights of the individual REITs will be further tilted based on the GRESB environmental score and the overall score. The weight of the REIT can either increase, reduce, or remain unchanged based on how green they are, and we call this process green tilting. Now, last but not least, the 4th step is that the index is also equipped with an impact measurement, which tracks green building related metrics such as greenhouse gas emissions, energy consumption, water consumption, and green building certifications.
Yes, Victor, you mentioned about the GRESB, or we call it its Global Real Estate Sustainability Benchmark. This is a mission-driven and investor-led organization providing a standardized and validated environmental, social, and governance data to the capital markets. It is established in 2009, and GRESB has become the leading ESG benchmark for real estate and infrastructure investments across the world. By 2021, GRESB is widely used by more than 120 institutional investors with over $28 trillion. Actually, GRESB conducts a very comprehensive and robust assessment The score goes beyond a qualitative assessment and is developed from a robust quantitative assessment of what it means to be a green REIT, such as you mentioned, greenhouse gas, water, waste, and building certifications. The GRESB environmental score used for our green filtering is an aggregation of environmental related metrics data and peer group percentile rank. It seems GRESB provides a standardized, robust, and well-acknowledged evaluation of the REITs in the index.
Yeah, Lee, that's right. A GRESB plays a very key role in the index construction process. So now let's talk about this in detail. The flow chart that you see on the left shows exactly how this index is constructed. Now, the index will be rebalanced on a semi-annual basis in March and September of each year. The starting universe will be all 275 listed Asia-Pacific REITs. Then, like most index construction processes, the REITs will be filtered for eligibility to pass the threshold of liquidity and free float market cap. Now, what makes the next step quite unique is that there's something called the dividend yield trap. The dividend yield trap means actually we will exclude REITs which have announced or have promised to pay very high dividend payouts. However, at the same time, the share price performance of these REITs are very low or very poor compared to the peers. So clearly, some of these companies which have announced very high REITs are in danger or are unlikely to be able to sustain paying such high dividend yields. So what we have done is that we have excluded them. And by adopting this dividend yield trap filtering, we have actually looked to secure the ETF's returns. Now, after this step, the next part, of course, will be screening the remaining 79 securities by GRESB's public disclosure screening. And I think this step is to ensure that the REITs are offering a very adequate level of transparency for investors regarding their ESG activities, right? So REITs which have a level E or very low or no score, according to GRESB, we will avoid these REITs as they tend to inadequately address ESG requirements. All right. So after all these steps, we have 67 REITs left. So what do we do with these REITs? We will do a performance optimization. So what this means is that we will look at the market cap and dividend yields, filter them to get a basket of 50 names. So let me tell you now how these final 50 names are generated. So if you look at the right side of the slide, all the eligible REITs are grouped into 4 quartiles based on market cap. Right, REITs in each quartile are ranked based on their trailing 12-month dividend yield. So we have now factored in both market cap size and dividend yields. Then the top 13 ranked constituents from the top 2 quartiles. So there's 13 and 13, and the top 12 ranked constituents from each of the bottom 2 quartiles are then added to form 50 constituents in the index. So we're taking 13 from the top 2 each and 12 from the bottom 2. Right? So by doing so, what we have done is to ensure that the 50 final names have the highest dividend yield compared to peers and have a diverse and mixed market cap to avoid any concentration or bias towards either the large caps or the very small caps, right? So here, let's look at a live example. All right, the table shows the top 3 holdings with all eligible 67 securities, and the largest, the number 1 there, is Goodman Group. And Goodman is one of the largest REITs in Australia. However, when we finalize the 50 names, Goodman no longer appears in this final list. The reason for this is because Goodman's dividend yield at a relatively low 1.3% is lower than its peers. So it's been excluded even though Goodman is one of the largest market caps. So by excluding REITs with lower dividend yields, the index can actually provide investors with a stable profit.
Yes, Victor. However, getting a having get a basket of these 15 names is not the end of index construction, because as you mentioned previously, we have a green filtering adopted in this construction process, and actually this is one of the key characteristics of this fund. So for the finalized 15 names, the initial weight will be allocated according to their free flow market cap, and that's when the green filtering comes in. The index further seeks to reward constituents with greener credential by applying a green filtering factor. The green filtering factor is decided by REIT's environmental score and overall score concurrently. On the right side of the slide shows the detailed green filtering factors. So for example, if a REIT has a higher environmental performance comparing to peers, together with a higher than average overall score, its weight will be further rewarded with another 50%. On the contrary, a REIT falling the lowest tier of environmental performance, they will be penalized with a halving weight. So by overweighting REITs with strong green credential and solid initiatives on sustainability, it will help the fund further enlarge the positive impact and embrace a sustainable feedback delivered by the investment.
Yeah, that's right, Lee. So at the beginning, we have highlighted that one of the objectives of the index and the ETF is to deliver profit and purpose. So the table at the bottom side of the slide shows the performance comparison between the green REIT index and non-green REITs ETFs that are listed in SGX. Now, it's quite evident that the green REIT index shows an outperformance compared to the other non-green REIT ETFs over the last 3 years. And over the last 1 year, the green REIT index has also shown decent performance. I think the evidence is attributed, I think, the outperformance to the following 3 reasons, right, that we have used in index construction. First, we have avoided the dividend yield traps, right? So we have mitigated the downside risk from poorer quality REITs that are not able to sustain the dividend payouts. Now, number 2, we have strived to include the higher dividend yield REITs, and these are selected to form the final basket of 50 names. And lastly, very importantly, which makes it really unique, is the inclusion of the green tilting methodology, basically rewarding the greener REITs and giving them a higher weight in the final 50 names. I think by integrating this methodology of green tilting, we're actually having a positive impact on the performance.
Yes, it seems the ETF does provide a very attractive profit. However, when we compare our ETF to other ETFs that in the market just showed in the previous slide, I think one of the biggest difference of our UOB Green REIT ETF is that it integrates sustainability. And as a sustainable fund, I believe impact and purpose is something we should also highlight here. So the slide diagram shows how the ETF delivers purpose by using green impact measurement. We visualize our index and ETF's green impact by measuring 4 metrics: greenhouse gas emission, energy consumption, water consumption, and green building certification. This slide shows how is our green REIT index performance compared to the non-green tilt counterparty index. Here, the slides list down what is the absolute number of the 2 portfolios with regard to the 4 metrics. We can tell from the chart that our green ETF has a better performance of all the 4 metrics. For the sake of everyone's easier understanding or putting into a layman perspective, 4% improvement in the greenhouse emission is equivalent to saving greenhouse gas emission from 600 homes energy use for 1 year. On the energy consumption front, 3% lower on energy consumption means 1.6 million homes electricity usage during 1 hour is saved. While for the third metric, the water consumption, the amount of water that you can save is about 34 Olympic-sized swimming pools. And for the fourth metrics, our green REIT ETF also have a higher percentage of certified green buildings. This dashboard clearly indicates that green filtering do provide the index with a positive green impact, and our investors can easily monitor what is the concrete impact of this ETF can deliver. So I would like to use a live case study. So one of the REITs that we hold in our ETF is DEXUS. DEXUS manages and creates the high quality workspace across the office, industrials, retail, and healthcare sectors. They have an AUM of 42.5 billion Australian dollar, and they are also the top 50 entity on Australia Stock Exchange. So on the sustainability aspect, this slide shows how DEXUS performs in the 4 metrics as well. So in 2021, DEXUS achieved 56% reduction in carbon emission using 2008 as a baseline. By June of this year, DEXUS targets to achieve the net zero emission across the group managed portfolios. Since 2008, they have reduced water use intensity by 28%, and they further plan to reduce another 10% by 2025 using 2019 as a baseline. Furthermore, DEXUS also have a quite progressive energy saving plan. As of 2021, 31% of the electricity usage of its portfolio sourced from renewable sources. They aim to increase the percentage to 70% by 2025 and commit to 100% renewable energies in 2030. To achieve this plan, DEXUS also have implemented some initiatives. For example, in May of 2020, DEXUS completed one of Australia's largest car park solar projects at Willows Shopping Centre. The project includes 4,800 solar PV panels that will generate approximately 2,500 megawatt hour per annum, equivalent to the usage of 370 Queensland households. So DEXUS also adopts the Green Buildings Council of Australia's Green Star rating tools to guide the integration of environmental and social aspects within the development.
Right, thanks, Lee. So that was very interesting. I think the example they have shown on DEXUS. So far we have illustrated how UOB Asia Pacific Green REIT ETF can provide profit with purpose. So this slide that you see now, let us do a summary. So at the beginning, we will screen for eligibility and sustainability performance via GRESB public disclosure scores to ensure that the chosen REITs adequately fulfill their sustainability ESG requirements. Now, next step, we will then, for the index, the index will then further optimize payout and reward the greener REITs to support the index providing profit with purpose. REITs with higher dividend yields are chosen and dividend yield traps are avoided to secure returns. Now, REITs with greener credentials will be further rewarded through green tilting. And last but not least, an impact measurement dashboard is generated to show the green result of your investment. So here we have reached our last slide. This last slide, we wanted to show how the performance of the UOB APAC Green REIT ETF has done since inception last year. The dark blue bar represents the ETF, right? The other bars represent the Asia Pacific equity market, the global bond market, and the global equity market. So as you can see quite clearly, the ETF has outperformed the market most of the time since inception and has shown a higher resilience in volatile markets. So at this point in time, I will hand our session back over to Edward for him to do maybe a Q&A or a wrap up. Edward?
Okay, thank you, Victor and Hong Li for the great sharing. It was really insightful. So I would just want to kind of, summarize in terms of three main things like what, why, and finally, and the objective for everyone's easy takeaway. So firstly, what? Now, this is the world first APAC Green REIT ETF with the aim to, contribute to the greening of the real estate sector with a focus on Asia Pacific. Secondly, why? I guess sustainable or green REITs are the key emerging trend today, and there are great opportunities for us to leverage on. And lastly, the objective. Now, it's a very, very strong objective, an opportunity for both profit and purpose for us to create a sustainable future for ourselves and the future generation. With that, I think we have come to the end of the presentation, and let's all move to the Q&A session. Yep, so let me just give me a while. Okay, let me just move on to the Q&A questions. Okay, let's see what kind of questions that we have for our speakers over here. Okay, I think we have one question. So, one of the questions here is that as an asset manager, what is the role, UOB AM actually aims to play a responsible steward to drive sustainability in the world and more specifically in Asia? So maybe Victor, will you want to take that question?
Thanks, Edward. I think that's a very good question. It's an important question to UOB Asset Management as well. Well, here at UOB AM, as fund managers, we consider this as part of our fiduciary duty in allocating capital to sustainable outcomes, right? For the firm's point of view, we do our sustainability and sustainable investing through an inside-out approach. What this means is, let's say from the inside, right? On the inside, we ensure that the investments and solutions in sustainability something that we are working very hard on, as well as also making sure that all our colleagues are very well versed or knowledgeable in sustainable in sustainable matters. Now, on the outside, what we do is that in the form of leadership that we have, we've been working with partners such as Robeco and Fukuoka Capital Management, who are leaders in their own right, all right, in Europe and in Japan. And we find that by working closely with them on solutions and on launching solutions in sharing of information and knowledge in sustainability, it actually allows us to play a greater role and helping the investment community, right? So I think another part that you talked about, responsible stewardship, and that ties in very nicely with our signing on to the UN-supported Principles of Responsible Investment. We did this in January 2020, and we were one of the first regional asset managers to do so. Now, why did we do that, right? The PRI, I think some of you know that already. The objectives of the PRI is to promote responsible investing, sustainable investing around the world. Now, in UOB-AM, we find that we are very well placed to do contribute to this because UOB-AM has offices not just in Singapore, we have offices in Malaysia, Thailand, Taiwan, Indonesia, Vietnam. So we know that we can play a role in Asia. So when we sign on to the PRI, we have committed to including responsible investing in our investment process. All right, so we've integrated ESG considerations in the way we decide and invest in do our investments. All right. So once we have done that, the next step was to ensure that we rolled this out across the region. So not just in Singapore, my colleagues in the various regional offices, we all adopt the same investment framework, right? That's how we look at investments and how we decide and we do our own ESG scoring, right? So that's very important. Now the next part, of course, is that after we have this foundation and knowledge that we've done across the region, what do we do? And that's why today we spend quite a bit of time talking about the Green REIT ETF. This is one of the solutions that we find that first is something that helps us in the fiduciary duty of allocating capital. The second thing is that it helps to meet the investor demand. And increasingly, we know that investors, not just in Singapore, but in the region are asking, I'm very interested in contributing to sustainability. At the same time, I'm looking for returns, right? As an investment manager, UOB-AM, can you offer me a solution? And that's why we've been working very hard to come up with this ETF, because we believe that it combines the best, right? The best, you want sustainable returns, you want a steady income stream, and you get it from the REITs. And then we add in the green tilting, for example, the sustainability measures of the green REITs. And that's why when you marry these two together, you get a product which we hope will appeal to investors. So I think, Edward, that's just one example of what UOB-AM is doing. And I think we always like to appeal and invite all the audience, all the investors to join us on our sustainability journey.
Definitely, there's definitely a high calling for it. Yeah. So I think that was actually really interesting. But we have also been hearing, a lot about greenwashing, and that's actually the next question. They say that there has been a lot of greenwashing. How are the regulators, in Asia dealing with this, and especially in Singapore itself? Yeah, I think that's a great question.
Yeah, thanks, Edward. Maybe I can help to answer this question. So, maybe the background is we can also see the trend that with the alarming increasing of the greenwashing that is already occurs in the investment space, right? So, market makers in the global have already begun to introduce some of the regulations in sustainability. So maybe I give a very big one. So more recently, the EU has already made the existing sustainable finance disclosure regulation, or we call it as SFDR, mandatory in Europe. So this is positive development in the right direction, to, as you mentioned, to curb the greenwashing and to provide investors with a better understanding of why they invest in, right? So maybe I can just shift my focus to Asia. For Asia itself, we also see a quite similar initiatives to something like SFDR being launched, because ASEAN has launched its ASEAN taxonomy to align the regulations and standardize the disclosures. Well, when we break down into some countries, for example, like Malaysia, they have already have their own Securities Commission. They have already launched or introduced some similar guidelines on the sustainable and responsible investment funds. And we can also see the similar trend in Hong Kong. Hong Kong regulators, the SFC, enhanced its disclosure requirements for ESG funds, which is effective in January of 2022. For Taiwan regulators, the Financial Supervisory Commission, they also follow the similar things. While maybe on a more local context, right? Maybe in Singapore, the MAS also have recently issued a guideline called Environmental Risk Management, which also provides a framework for the asset manager to adopt. So actually this, you can see all these frameworks helps to enhance the resilience of the fund and further aid the asset manager to set out the sound environmental risk management practice to mitigate the greenwashing. While maybe if we focus, we move to the real estate sector, while there are many, maybe not much industrial specific regulations in Asia, but definitely we do expect this is the trend, which is inevitable because we will foresee an increasing adoption of the green certifications. So one of the examples, as I present previously in the DEXUS case study, in Australia, the real estate can already adopt the Green Building Council of Australia's Green Star ratings to guide them to further integrate the environmental and social aspect of the, sustainable developments. While in Singapore, we are also seeing there are some existing widely used green mark certifications, where a building is graded based on its environmental impact and performance. So as more buildings are being certified, we will expect these regulators to impose restrictions relating to these certifications. Like for example, the public sector in Singapore currently leases office space only have the buildings that are at least have green mark Gold Plus certified. Events organized by the public sector are also similarly required to be held only at green mark certified venues. So this implementation encourages more real estate to be certified because of the rising pressure from the government. Therefore, driving more new development to consider green factors and further accelerating the greening process of many existing buildings. So policymakers are therefore expect to continue in their development of regulations to encourage a greater transparency and adoption of sustainability into assets. So just to recap, we believe this trend definitely will continue, and we will foresee more regulations coming from other governments. Yeah, thank you.
Okay, I think that's good, because it actually gives the assurance for retail investors like ourselves in terms of, the greenwashing, how we exclude them. So it actually gives us assurance that we know that what we are investing is, truly sustainable, truly green. Yeah, so I think that's good. Okay, I think another one question. Okay, I think, there's a question about the investment objective for this ETF again. I guess just now the presentation a lot to, absorb. So I'll just reiterate from my end. The investment objective of the ETF is basically, to replicate the IHUOB APAC yield focused green REITs index. Now I'll just probably kind of re-highlight the four key characteristics about the ETF. Firstly, we use GRESB real estate assessment to quantitatively, kind of evaluate the ESG quality of the green REITs. Now, the assessment comprises of the three main indicators: GRESB overall ESG score, GRESB environmental score, and the environmental performance, and the GRESB public disclosure score to check, how REITs manager actually disclose their information. And secondly, the index selection process actually involves selecting a basket of 15 names with high yield REITs to provide an attractive profit. And also, the ETF actually aims to deliver 4% dividend on a quarterly basis. And thirdly, once the 15 names are selected, now the weight of the REITs will be further, tilted based on the GRESB environmental score, in addition to the overall GRESB score. So the weight of the REITs can either increase, reduce, or remain unchanged based on how green they are, and we call this process green tilting. And of course, I think last but not least, the index is also equipped with an impact measurement which tracks green building related matrices such as greenhouse gas emission, energy consumption, water consumption, and green building and etc. So of course, not to forget, this is the world first APAC green REITs ETF, which is of course is a passive strategy with track the underlying index I've mentioned before. Yeah, so I guess I hope that actually give a more clarity, a reiteration point on the EFT characteristics. Yes. So yeah, hope to keep those questions coming. Yep. Okay, I think this is a very interesting question. Maybe it's either to Victor or Hong Li. How do you actually turn, climate ambition into climate action? How does this actually apply to this REITs portfolio? I guess this is a very, relatable question. We talk about a lot about, what we want to do, what we want to, what are the targets and all this. But how are we actually getting into all these actions? Yeah.
Yeah, thanks, Ewa. Maybe I can take this question. So in UOB, right, we believe that the companies should treat climate-related risk as a material issue to their business and align their disclosure with the recommendation of TCFD. So maybe it's also a complement to what Victor mentioned in the first question, right? So in UOB AM, we have our proprietary ESG analysis. We account for a company's greenhouse gas emission as part of our ESG analysis and scoring process. And very importantly, we also have an ongoing process to detect and monitor the controversies on a daily basis of companies in our portfolios to ensure that the investments are not tied to, very severe climate change controversies. And actually, this is all fall under our proprietary ESG analysis system. Besides, we also have our active ownership, which is also related, have some integration on the climate change, right? So, for example, our proxy voting, we use ISS, and which also take the sustainability and climate change into the considerations. And also the topics surrounding the climate change, also a potential starting point for our company's engagement moving forward. For our UOBM, we have our regional footprint. So we'll work with our regional offices to further conduct engagement. For example, like to have a call with our localized companies to see if we can get more information about their current kind of roadmap to the climate change, etc. So in this case, actually in UOBM, we can make sure that we'll have a kind of big network so that we can further engage with our ASEAN or Asia companies, localized companies, right? So this is how currently we do for the with regard to the climate change and in our UOBM. As for how actually we translate this into our real estate investment portfolio, again, I think this UOBM Asia Pacific Green REIT ETF is a very, very good example. Okay, so in this ETF, as mentioned previously, we leverage on, we work with SGX together with GRESB. And as presented previously, GRESB conducts a very comprehensive and robust assessment for real estate and infrastructure companies, funds, and assets, right? So this is like a very well-known and very acknowledged benchmark for our the real estate companies to adopt and to help the investors to evaluate how green or how sustainable that this real estate comes, right? So this is why we further include GRESB into our investment, because we want to use GRESB as a kind of very well-acknowledged benchmark for the index and for the ETF construction to curb and mitigate the risk of greenwashing. And also very importantly, as mentioned by Victor previously, once we complete the ETF construction, actually we are also equipped them with an impact dashboard. Within the impact dashboard, also as mentioned by you, Edward, we have 4 metrics. We will get the absolute number of the performance for our portfolio comparing to the non-ESG integrated portfolio to see what is the difference. If our ETF really can positively contribute to the sustainable performance on the long run. And we can also use this dashboard to show our clients what is the current performance, how green this portfolio can deliver when they invest in this ETF. Yeah, so hope this is comprehensive to answer your question. Thank you.
Okay, that's a really good answer. Yeah, and I think probably, yeah, we have one interesting question, I guess. One is that the question is that, is GRESB skewed towards environment component and focus on asset level performance. How about the governance and the I think the G and S components? Asking which are the top quartile REITs. Is there a concentration in sub-segment like commercial, hospitality, and etc.? I think maybe you might, or Victor or Hong Li, you might want to actually want to reiterate, how the whole index selection process and how GRESB scores are being established over here. Maybe that will give a more clearer picture. Yeah.
Okay. Yeah, thanks, Edward. Actually, it's also a very good question. Previously, we have a one slide to mention about what is this GRESB score about, right? So we introduced GRESB, did a very thorough research. Actually, it's a qualitative plus a quantitative research through the real estate. While for our ETF, we are mainly focused on their environmental performance, right? So we mentioned we will use a combination between the GRESB overall score plus the GRESB environmental score, and we will mainly focus on the GRESB's environmental related metrics such as the greenhouse gas emission, water consumption, waste consumption, and green building certification. However, actually, what I want to highlight here is GRESB will not purely focus on the environmental evaluation, but actually they have evaluation on the real estate from two components. The first is the management. The second is the performance, and they will assign the different percentage, different weightage to the different, the metrics. So there are also other metrics, like for example, under the performance, they will also monitor if the data monitoring, etc. Also, if they will monitor what is the tenant and community, etc. So actually, I would say some of the metrics that measured by GRESB is also under the social and governance side. So in this case, for the GRESB total score or GRESB overall assessment per se, right? Actually, they do a very thorough assessment. So that's why when we, give the weight green filtering, give the weight adjustment to our 50 names, we have a combination between the GRESB total score and GRESB environmental score, just to make sure our selection, our weight allocation actually is comprehensive and fair enough. Yeah. So hope this can answer the question.
Yeah, I think that's great. I guess the whole GRESB score is actually kind of, balance around all both EG and S kind of factors. So I think that gave us the kind of assurance as well. Okay, I guess with that, I don't think we do have any more questions. So I guess one thing is that probably just want to wrap up this whole presentation over here. And I hope, everyone has a great takeaway on how, Asia Pacific is, moving towards in terms of the green real estate sector. And that is like what Hong Li has said, $17.8 trillion in US dollars of opportunity. So that really gives us that profit and the purpose that we can actually achieve for a sustainable future. So with that, I think we can actually come to the end. Thank you, everyone. And then I'll hand it back over to you, Chris. Thank you.
Thank you to our moderator, Mr. Edward, and also our expert panelists, Victor and Hong Li. And the next session actually going to be a little bit special. It's the first time that we have session in Cantonese. But please hold on, our next session that talk about investing in Asia will start at 3:30 p.m.